This is Hi, this is Professor Sarath Babu, your accounting faculty. So we have been discussing about preparation of income statement, balance sheet, and cash flow statement, and we also covered the revenue recognition in the past sessions. So far, we have completed 9 sessions, and we are going to have 10th session. So by this time, I should have completed valuation of inventory. So we are lagging behind a session, therefore I thought of covering certain calculation part through this video, and we can take the discussion part in the class. Right, so I'm going to talk about inventory valuation. Of course, in the class I'll be discussing about accounting standard in AS2, and we have different methods of inventory valuation, that is FIFO method, LIFO method, weighted average method. What are the implications of these different methods on the income statement? That we will take it up in the class, but now we will focus on computation part. So I'm going to solve Levi's Corporation from the textbook case number 6-2, which is in page 167. I'm sorry about this. So I'll be solving the case, and we'll find out the solution, and you will have a discussion of the impact of different methods on that financial statement in the class. So, so the case is all about preparing, calculating inventory valuation for 3 years as per 3 different methods. The first method is FIFO method, second one is LIFO method, third one is weighted average method. So I'm going to solve all 3 methods for year 1, year 2009, and rest of the 2 years you are all going to solve it and then summarize it. So look at this, and 2009 Levi's Corporation, they are having a beginning balance of inventory 1840 units at $20, and they have purchased different lots at a different price during that year. So my total availability of inventory, one can look at here, 3840, whereas they sold 2820 units at a price of 34. Now the problem comes when I calculate COGS. You all know that when my sales is 2820 units, I allowed to recognize expense for 2820 units only. That we all know that through matching concepts. So your expenses should be mapped with the revenue. So my revenue is here 2820 units at the rate of 34, which is 95,880. But what about my expenses? I love to recognize expenses for 2820 units. That's how do I calculate that? Should I take randomly some numbers or lots from here and then compute my expenses, or do I need to follow certain process? Yes, we love to follow certain process that depends upon the method that we are following. So I'm going to calculate COGS as per FIFO method. FIFO is nothing but first in, first out. The first lot that I'm having, that I'll be consuming for my COGS, and as then I'll move on in terms of the lot. So first I'll use 1840 units at the rate of 20. Second, I'll use 600 at the rate of 20.25, and third I'll be using 800, and so on until I'm reaching 2820. So let me calculate COGS as per FIFO method. The first lot, FIFO means first in, first out. So what is my first lot? 1840. So I'll be issuing or I'll be consuming 1840 at the rate of $20, and total is 1840 into 20. So this first lot I have used it. So let me do a sum over here. Okay. So then second lot, I'll be taking a second lot, that is 600 at the rate of 20.25. So let me take that second lot 600 at the rate of 20.25, and the total is 600 into 20.25, so 12,150. So I have to make sure that I'm reaching 2,820 here. So right now my total consumed inventory is 2,440. So now I'll have to take the third lot, which is 800. So the third lot is 800, and how much should I take from the third lot? Should I take the entire 800 or the portion from the 800 to make this 2,440 as 2,820? Yes, I'll have to take some portion of that third lot, that is 380. So if I take 380 from the third lot, 380 units from the third lot, you can look at that. Okay, so exactly, so is becoming 2,820. So let me take from the third lot 380 at the rate of 21, and the total is 380 into this. So when I sum it up this, so as per my FIFO method, my COGS would be 56,930. Okay, I have calculated COGS. What about that closing inventory at the end of 2009? What is a, so how do I calculate that closing inventory at the end of 2009? So look at that. Look at that, the sequence of the activity. So from the first lot I have issued all, so which is over here. So I have exhausted all the first lot, that is the beginning balance, and second lot I have completed. Third lot I have taken only 380 units out of 800 units. So how many units left out from the third lot? So from the 800 units, let me deduct 380. So I'm having a closing stock of 420 from the third lot, which is valued at 21. Therefore 420 into 21, that makes 808.20. Okay, what about the fourth lot of, that is 400, which I have here? Did I use for issuing material? No. So therefore the entire fourth lot is available. Fourth as well as the fifth lot is available at the closing inventory. So what I'll do means my closing inventory 400 at the rate of 21.25, and the total is 8,500, which you can see it over here. And then again the fifth lot, which is again untouched, 21.50, and the total is 4,300. So my total closing stock is 21,620. So that's my closing stock. So as per FIFO method, first in first out method, so I'm using first lot for my material consumption, that is for COGS. Then after using first lot, then I'll go to second lot and the third lot and so on, and I calculate my COGS. My COGS is 56,930, and my closing stock is 21,620 as per FIFO method. Hope this is pretty much clear. Let me move on to LIFO method. So as per LIFO method, we allow to issue our inventory from the last in first out. LIFO means last in first out. So which is the last lot over here in this sequence. So when I look at that, the last lot here is 200 and the next last lot is 400 and next lot is 800 and so on. So whenever I issue inventory as per LIFO method, what should I do means I allow to issue from the last lot. So what is my last lot here for the year 2009 means it is 200 at the rate of 21.50 and the total is 4300. Okay, so let me have a sum over here so that I'll be able to match that number of units of sold as I remove lots from here or as I issue lots from here. So now last lots 200 have taken, and what is the next last lot? That is 400 units at the rate of 21.5 and total is 8600. So far I have issued 600 units. Then what should I do? I allow to go to the next lot, that is 800 units. 800 units I allow to issue at the rate of 21 and the total is 16,800. Okay, did I reach 2,820 over here? No. So which means still I can proceed to the next lot. What is the next lot here after 800 when I come from the recent one? So the next lot is 600. So let me issue 600 at the rate of 20.25 and the total is 12,150. So I reached 2000 here. Now how many units do I need to have to make it 2820? So I need 820 units from here. I need further 820 units. So that unit, from where should I take that for 820 units? Means the lot that is available for me is the beginning balance, that is 1840. So from this 1840 I allow to issue 820. So 820 when I issue, now you can see that my total sales unit is 2820. So this 820 units I'll be issuing at the rate of 20. So therefore total is 16,400. So that makes my total COGS to be 58,250. Right? So here my COGS is 58,250. So then what about my closing stock if I follow closing inventory? If I need to calculate, if I follow LIFO method, what would be my closing inventory? So look at that, I have issued all 200. So I have issued all 400. I have issued all 800. I have issued all 600. But I have taken 820 units from 1840. So which means how much would I be left out over here means I'll be left out 1020. So therefore my closing inventory would be 1020 at the rate of 20 and the total value would be it's like 20,400. So that's my closing value and this is my COGS as per LIFO method. That's pretty much clear, right? So look at that the differences, and when I follow FIFO method there will be a different COGS I'll be getting from LIFO method. So I hope how to compute COGS using LIFO and FIFO methods as well as the closing stock. Then let me move on to the weighted average. So it's pretty straightforward and easy for me. How am I going to calculate weighted average? Means I'm just going to calculate the total units over here uh, and rates over here to compute the total. I'm giving weightage to the units over here as per the weighted average method. So how much is the total price? 78,550. So this is the total price for how many units? So of the total units of 3,840. So which means what would be my unit price if I calculate the weighted average means my unit price would be 78,550 divided by the total, that is 3,840. Therefore my unit price would be my weighted average price. I'm sort of calculating average over here, so it's a weighted average that I'm calculating. So my weighted average unit price is 20.45. So once I calculate that, then it's pretty much easy for me to calculate COGS as per weighted average method. So COGS for how many units do I need to calculate? For 2,820. And what would be the rate? As per weighted average method, the rate should be of 20.46. So this is my COGS as per weighted average method. And what about closing inventory? So my closing inventory is, so how many units do I left out as of now? So look at that, my total beginning balance as well as the purchased units are 3,840, of which the Levi's Corporation has sold 2,820. Therefore, how many units would be left out means this 1,020 units. And these 1,020 units should be valued at what price? The weighted average price, right? That is 20.46. That's the closing stock. So look at that. That's pretty simple. All the three methods I have close COGS as well as the closing inventory. So let us summarize this here in the table. So my COGS as per FIFO method is 56,930 and closing stock as per FIFO method is 21,620 and LIFO method COGS is 58,250 and closing inventory is 20,400, right? As per weighted average method, my COGS is 56,680 and closing inventory is 20,650. So I want you guys to proceed, further extend this solving this Excel sheet and then compute for year 2010 and 11, and I want you guys to update that summary over here. So what I need means for um, this area should have been filled, and you need to fill up COGS closing stock as per the three methods. So if we're completing this, then it's pretty easy for us to discuss on what are the implications of different inventory valuation methods on financial statements. It has a huge implications. So we need to have a lot of time to discuss on the implications. So for which I want you all to solve this case and complete this summary table before coming to the next class. Thank you.